Hello everybody and welcome to Tech Talk here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. This is where we're going to take a look at some charts, some option analysis, and I'm going to give you some perspective on two stocks that are going to announce earnings this afternoon. Taking a look at the first stock, it's going to be FNSR, FNSR. Okay. So taking a look at FNSR Corp, basically this is a communications and networking company. You can currently see that just from taking a look at the charts, you're seeing the stock has basically been in a range between $34 and $36 for the last month. It's above its 20-day moving average, so the trend is definitely bullish, and you can see that it's above its 50-day. This area right here, $32 to $34, that is the area where the bulls are going to have to battle with any negative news that could potentially come out or any negative action. This is the area that has to hold if they're going to continue to have their camp be in control as far as the bulls are concerned. What is notable, though, is that one of its peers, Ciena Corp, ticker symbol CIEN. You can see they announced earnings, they disappointed, they missed, and the stock actually went down. If I actually change the scale view real quick to a percentage, you're going to see quite clearly how dramatically the stock pulled off. Does this mean that FNSR has to drop off as well? No, but it is putting us on notice. I will note that it is bouncing off of its 20-day moving average with some conviction. That is a positive. A couple other things that you want to look at. The seasonality of this. Now, taking a look at the seasonal charts, first of all, the correlation coefficient on one of its peers before it announced, 68%. That basically means that the current price action with its basic history from 1990, they plot that on the green line. This is the correlation line. Basically, you see that the seasonality of this is in March and April, Ciena tends to drop down. Well, it dropped down pretty significantly. Even though the models were projecting a potential challenge to the upside, the seasonal line is projecting some downside, and you can see that it gapped down pretty significantly in advance and post earnings. Now let's take a look and see what the seasonality chart reads for FNSR. Taking a look at this right now, you'll see, first of all, the correlation coefficient is negative 29. That basically tells me that the green line, the correlation line, is not very correlated with the current price action, even though it looks like it has been moving along that line. Again, I would be mixed at best to say, but it is pricing in the potential for, in March, a pullback. You also see that the target is a pullback, but you're seeing that the forecast here is saying higher, higher, and higher, as well as lower for the 20, 30, 40, and 50 days. Now, this is all nice and good, but really what you want to do to get that feel for what the potential move that's being priced into the stock is, go to the options. And what do I mean? Specifically, I'm going to go to trade and I'm just going to go to options. And what I'm going to do is price out the straddle strangle markets for FNSR. Why am I doing that? This is going to give me a perspective on what the options marketplace is potentially pricing in for a move in advance of earnings. Now, I'm going to take a look at the March options. The stock is trading at $34.95. So basically, the at-the-money strike is the $35 strike. So I go down to 35 right here. You can see that what we will do is price out the straddle, which is the at-the-money strike. So all I do is add up the offers on the puts and the calls for the straddle. Then I look at the next strike out of the money put, right, $1.65, and the next out of the money call, $1.50. I basically add up all of these offers, so 210 plus 210, and so that's 420, $1.65, $1.60, so that's $3.20. So basically you're looking at $7.40 as the total. You divide that by 2, which is roughly giving you about a $3.70 move being priced in to the stock right now. That means that between now and March expiration, which, by the way, is in 8 days, they're pricing in a $3.70 move. As a matter of fact, they're pricing that in to the actual move tonight as well. Now, the stock is down, up 57 cents, and if we take a look at the stock, you can see that it's right at its almost best levels of 35.25 for the day, up 50 cents. We're going to watch this one very closely. But again, it's pricing in the potential that it could be as high as $38 or as low as $32. And as we had noted, a break of $32, specifically $32.43, that would be bearish for the stock, but that is the next support level, and they're pricing in the potential that it could challenge that level. This is where the bulls that were potentially looking at exposure in the communications and networking area, that's the area that's going to have to hold and could be an opportunity for some sort of strategy if in fact it holds, or if we see some upside. Again, there could be strength in that. The next name that I want to take a look at is Pay. Ticker symbol is PAY. And Verifone is, and I'm going to actually just remove this. Verifone right now is trading right around $20.31, up 8 cents. You can clearly see that it has been in an uptrend in 2017. It challenged a few days ago the 20-day moving average, but has bounced off. And now it's basically off of its best levels today, slightly now basically ticking flat to up slightly. The 20-day moving average comes in at 19.95 and the 50-day comes in at 19.13. These are two areas that we're going to want to watch post earnings, especially if the stock begins to drop. You're going to want to see the midterm level of 19.13 hold if the bulls are going to continue to have some upside. Taking a look at the straddle strangle market, and again, this just gives me a 50% probability of a potential move in these stocks. So again, looking at Verifone, ticker symbol, I'm going to do create my own, and all I do is just go down and look at the closest expiration month, which happens to be March. The stock's trading at 2026, so again, the straddle is the at-the-money strike, call and put. So you add those up, just take the offers there. So that's a $1.10 and a $1.80. Then the first strikeout put, which is the 19 put, and the first strikeout call, which is the 21 call. And you just add all of these up. So $1.10, $1.80, $1.90, $45.65, that's a $1.10. So basically you have $3. It's pricing in the potential of right around $1.50 to $1.75 move in the stock going into this binary event. Now the stock is basically flat, up about 3 cents right now. We're going to watch this one very closely in this communication space. And again, critical areas that you want to watch post earnings. So we can see that the stock could be priced in as high as $21.75, $22, or as low as going down to 18 and some change. And 18, if it breaks $19.13, folks, that means that the midterm bulls could be in jeopardy. Then the next level you're going to watch is 1838, which is its 200-day moving average. We'll watch this one very closely for Verifone, ticker symbol PAY. All right, folks, that's it for Tech Talk, where I gave you transparency on both what has happened in the past, utilizing these charts, as well as what is the options are pricing in for potential movement going into this binary event earnings. I hope this gives you a lot of transparency and gives you a little bit more of a perspective so that you can make better decisions on the strategies you're deploying. All right, join me at 4:30 Eastern Time here at MarketStream.live, where I'll be doing all the closing action here after today's exciting trading day. See you then.